Hi everyone, let's cover my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the 1 hour time frame, where we then count a finished impulse to the upside in a wave 1 or A, look for a 3-wave corrective structure down in 2 or B, and then we want to see impulsive continuation to the upside in a wave 3 or a wave C. Now, the most common retracement target for a wave 2 or B is the 0.5 to the 0.786 Fibonacci area taken from the start to the end of your 1 or A, giving you a target between 97.7 and 92.7K. However, the 0.382, which actually has been touched over here, is also still a target at 99.7K, just a little bit less common, but a target nonetheless. The vertical line here on my chart is important. That is a fib time. Preferably your wave 2 or B is finishing after the 0.382 fib time, also taken from the start to the end of 1 or A, comparing this move in time with the correction in time. It doesn't necessarily mean that price needs to make a new low though, because we did hit the minimum retracement target, the 0.382. It's just that preferably time-wise you finish after the 0.382 as well. Now, another line that is on my chart is this red vertical line, and that one also plays an important role, because if we do end a wave 1 or A at this particular high here, then because price took the high afterwards, we have to think about either a flat A, B, C, a WXY, WXY, or a triangle A, B, C, D, E, continue. If it is a triangle, however, only allowed in a wave B, not allowed in a wave 2. So that's actually bearish, because then after an ABC, you look for price to move down again. But if we look for a flat A, B, and then a wave C, your wave is C here is over twice the length in time of A plus B. So this fib time is taken from this high, the start of your wave A down, to this high, the end of your wave B. Now, preferably, your wave C here is shorter than twice the length of A plus B. But it is not the case. As you can see, we clearly made lows over here after this 2 fib time, which is not really what you want to see in a flat structure. So it does decrease the probabilities of counting this as a flat. But it also then makes it a bit difficult to count this as any other corrective structure except for then WXY. But in a WXY, if W is a zigzag, then wave Y is not allowed to be a zigzag. So this then has to be a flat, which at the moment it is not, or it has to be a triangle A, B, C, D, E, and it's too early to talk about this. And alternatively, you then have the triangle A, B, C, D, E, right? Now, price is not allowed to take out this low, so that's the invalidation of a triangle. So you still want to see a D up, then an E down, and then continuation. So this takes some time still as well. And besides, as mentioned, that would actually be bearish, because then you have A, triangle, B, C, because a triangle is not allowed in a wave 2. So it's not the prettiest count that we have on the chart. Now, an alternative bullish scenario is a multi 1-2. Now this one also awkward, being a 1, 2, 3, 4, 5 in a 1, and this is then your finish 2. Now in this particular scenario, your wave 2 would be incredibly short in time. Now it's not the first time it happens. Time is never a confirmation or an invalidation. It is a probability thing, right? So preferably your 2 is finishing after a 382 fib time. And if we take the fib time from the low to the high of your 1, double click here, toggle on the 382, then you can see that clearly the blue 2 finished way before the 0.382 fib time, right? So that's not really what we enjoy to see. And then this has to be counted as another 1. This mess to the downside here is then counted as another 2, touching the 886, which is a very rare target for a wave 2. And then you either look for multiple 1-2s up, continuation in a 3, or you're gonna mimic a triangle where this is another 1, 3 wave 2, another 1, 3 wave 2, and then you continue up in a very big wave 3. And I just wanted to show you what it looks like to have a triangle looking multi 1-2. So this is the start of February 2024, around 42k. You can clearly see that if you would pull two trend lines, it looks like a triangle, but it counted as a multi 1-2, and then afterwards we had the big impulsive structure towards the upside. The invalidation for this scenario is of course very clear. It is taking out the low here at 99.4k, and basically this is your most bullish scenario where we just move towards the upside and we do not see any bigger retracements, nor do we move down over here, because this should be a wave 3 to the upside for much higher prices. And then we move into corrective scenarios, which are bearish scenarios. So this is a WXY double zigzag unfinished, because we have our W, we look to finish a wave X, and then a zigzag up in a wave Y. And then after wave Y is finished, we look for price to move down. Same here, common target, most common target for a wave X is the 05786, taken from the start to the high over here of your wave W, 97.5926, but the 382 is still a target for a wave X as well, 99.5k, and is touched here with the low. Now due to this structure, right, inside a wave X, we then have to look for either a flat A, B, C, and in this case, your wave C, by the way, is not too long, so you take a fib time from the start of your wave A, you'll move down here, to the end of your wave B, toggle on the 2, and you can see that we have more than enough time to finish a wave C of a flat, right? A WXY is your other structure, where this then is a WX, and then you need a wave Y. Now, because your W here is then counted as a flat, your wave Y can be a flat, your wave Y can be a zigzag, and your wave Y could be a triangle structure. But by all means, afterwards, you look for price to continue towards the upside. Now, one thing that I marked here, and this is for the Elliott wave nerds like myself, is this structure up. Now this then has to be counted in this scenario as a flat ABC, because price here took the high and then moved down impulsively. That means that your wave B has to be a corrective structure, most commonly a zigzag family structure. Now quite clearly this is not a simple zigzag ABC, and even counting a double zigzag in a WXY here on the lower time frames is quite a challenge. So you then have to consider a WXYXZ, but of course a WXYXZ is incredibly rare, which lowers the probabilities, of course, for a wave B here. It's still an option. It was weekend price action, so it's not an invalidation, but it is also, of course, not ideal with the alternative of this being a diagonal. But if this is counted as a 5-wave diagonal, then you have to count a 5-wave finished impulse in a 1 or A. The price action in the end is quite similar, because in this scenario you look for price to move up, and in the bullish scenarios you also look for price to take out the high, at least before taking out the low, right? It's just little detail, I suppose. Now this particular scenario, a WXY double zigzag, would then be part of a bigger flat. So if we zoom out, you then have a 3-wave A, 3-wave B, and a 5-wave C. C most commonly takes out the low of your wave A, expanding flat, regular flat. Only in a running flat, which is the most rare flat structure, does it not take out the low of your wave A. Most common target for your B, 112.9k to 115.7k. And then we have your actually most bearish scenario, which is a finished WXY over here, with then a flat here in your X. In this particular case, wave Y, however, in yellow did not reach the 0.618. We just missed out. And the 0.618 generally functions as a minimum target for a double zigzag wave Y. This move to the downside, for example, here is also counted as a double zigzag ABC, correction ABC. And if you would take a trend-based fib from the start to the low to the high over here, and then instead of the brush, you actually select the extension. So from the high to the low to the high, and you toggle on 0.618, then you can see that here we did touch the 0.618 nicely. So the minimum target is reached, but in this particular case, we actually missed out on touching it. Lowers the probabilities for this structure up to be a finished structure. And that is why the other scenarios, unfinished WXY, a 1-2, multi-1-2, would have higher probabilities than a corrective structure. Now, this scenario would actually be your only scenario to, at the moment, take out this low and move below 89, which then is your flat again, A, B, C, and continue up. At the moment, though, not the highest probabilities because of the short structure in your wave Y. If we look at the CVD divergences, then here, of course, at the all-time high, big bearish CVD divergences, lower highs on price, higher highs on the CVD, lots of absorption of market longs with limit shorts, pushing price to the downside. Now, at the moment, we still have this little bit of bearish CVD here. It's still bearish market structure, as you can see. But this bearish CVD now also starts to at least be countered by some bullish CVD. Now, ideally for the bulls, you invalidate this bearish CVD. So you move above 103.7K. You take out this high here to invalidate this bearish CVD. And then for the bulls, it is important to continue bullish market structure supported by more bullish CVDs. And if we do see more bullish market structure supported by more bullish CVDs, that is when this bullish CVD becomes relevant. At the moment, this one here is not too relevant because we retrace so deep to the 886 as explained in the analysis. But if you do start to move to the upside, higher highs, higher lows, continue ranging, bullish CVDs appear more often, that is when this bullish CVD becomes relevant, and the target for the bigger bull CVD is taking out the all-time high. Now locally here, these two small bullish CVDs played out. You can see the checks. This one here hasn't yet played out. The target for this is taking out this high. We're not there yet, and we still have a bit of bearish CVD. So at the moment, at the low of this range here, we have a bit of a mix, bearish CVD, bullish CVD. If you invalidate the bearish CVD, that's a good sign, but you want to continue moving up with higher highs and higher lows with new bullish CVDs as well. If we then look at the news, then yesterday we of course had the inauguration day, so it caused a bit of volatility on the chart as well. The rest of the week is quite calm with regards to news at least. And then here Friday, January 24th, we do have some news, 4 p.m. Central European time. So just make sure on Friday that you do trade safe. And finally, the probabilities and the polylines. So from an Elliott wave point of view, the probabilities are at the moment higher to still take out the all-time high, either with the unfinished WXY or the multi 1-2 or a single 1-2. In all of these cases, you're looking for price to take out the high anyway. And then it's more about what comes after that decides if you come back down and later continue, or you actually continue impulsively towards the upside. The probabilities are lower for a finished WXY here, and for price to move down to take out the low according to the red polyline. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.